It's currently $3 trillion as an industry. If I extrapolate out the rate of growth, the trend rate of adoption is twice the speed of the internet. As the internet slowed down in adoption rates because it gets more saturated, if we extrapolate the same, we get to about 4 billion users by 2030. So I think the asset class goes to $100 billion, and we're only 3% of the way there.
What's the banana zone?
Crypto prices go bananas in the final part of the cycle.
When did that
create this whole meme around it from about a year ago, getting everybody ready for the banana zone and kind of announce the big banana zone. There's like whole memes about it. I don't know, Elon's putting bananas on rockets. I don't know if it's related.
Oh, really?
I don't know if it's related, but there's been a whole bunch of this banana stuff.
And did you launch banana token or not yet?
No, not guys. This is a technology that is the new layer to the internet. It's not just about tokens. What's unique about this technology is there's token incentivization built in, which is why these networks bootstrap so fast. It's currently $3 trillion as an industry. If I extrapolate out the rate of growth, the trend rate of adoption is twice the speed of the internet. As the internet slowed down in adoption rates because it gets more saturated, if we extrapolate the same, we get to about 4 billion users by 2030. So I think the asset class goes to $100 billion, and we're only 3% of the way there. So this is the largest, fastest accumulation of wealth in all human history that lies ahead of us. It's the big rebalancing, how everybody can get involved, whichever country you're in, however much you earn, right? So it's the big one, the biggest macro trade of all time. That's primarily my interest in the trade. The whole space is driven by network adoption. More people join the network, the more applications that get built, the more valuable these networks become. Beyond that, it's then broken down to different companies or projects selling block space. That's all they do, which is a data storage and essentially that block or distributed ledger. And they've all got a different sales approach. Bitcoin has, we're the most trusted, we're secure. Ethereum is like, we're the broad big one. Solana's like, we're the fast retail. So everyone is selling block space. But again, we're all incentivized to get passionate behind these things because of the tokens. This whole thing is being driven by a big macro trend. The big macro trend is the debasement of currency. So as liquidity gets pushed into the markets every 4 years when the governments go and roll their debts, this is driven by everything I call the everything code, some work that I did showing that every 4 years governments need to refinance their debts. And what they do is inject massive liquidity to be able to do it and try and get interest rates lower. So as we do that, it creates a perfect 4-year cycle. And it's not going to go away until we get rid of the debt equations and everything else. So where are we in the 4-year cycle? I break them down by seasons, each year being a different season. Okay, winter being when liquidity is being taken away, 2022. 2023, spring. Okay, markets stop going down. People don't quite believe it yet, but you see green shoots coming, but it still feels a bit wintry and cold and miserable. Then summer, which is what we're finishing now. Macro summer is year 3, same year as the election cycles. And then we go into macro fall or autumn, crypto. Yeah.
When is the trans time
of the year. So it's just an annual cycle.
When you say?
It's the beginning of the year. We go into the next, the fall or the autumn cycle. That's usually the most explosive.
Beginning of next year.
Yeah. And that's usually the most explosive. So summer starts to rip, and then we hit what I've called the banana zone, which is when everything goes banana.
And how long will the banana zone last for?
That depends on global liquidity. Normally it lasts until about November because of this cycle. It lasts until November, and we have different structures of these cycles. We had the last one, which it usually has a peak around tax season. So March, people have to sell some tokens to pay taxes. It falls for a bit and then it rips at the end of the year. Last time it fell 50% over that period in 2021. And then it ripped, but it didn't really extend, and everyone kind of got caught out by it double top. 2017 and 13, well, they were different. They had the same cycle structure. It went to the summer, 2017, Bitcoin 10x'd from there in 4 months.
It's the same.
And that's the blow-off cycle. So we don't know what we're going to get, a stunted cycle or a blow-off cycle, but thinking about the political change and what's been going on, the probability has to be towards a blowout cycle. So that will be much higher price than everyone expects. Most people have PTSD from the last cycle. And they don't want to overextend themselves, and they're worried that they're going to be caught holding the bag, which usually means they'll sell early because the markets give as much pain to the most number of people as possible. Why, in 2021, everyone's expecting 2017 to happen.
Yeah.
It doesn't. Maximum pain. So that's where we are.
Bitcoin began the final week of January on shaky ground, dropping below 100,000 amid a broader market decline tied to U.S. stock market turbulence. This downturn came as futures fell and fears of a price crash loomed large. Adding to the tension, the Federal Open Market Committee, FOMC, was poised to decide on the future of interest rates, contributing to an already uncertain environment for risk assets, like Bitcoin. The market's nerves were rattled further by the rapid rise of Chinese AI startup DeepSeek, which has emerged as a major competitor to ChatGPT. The unexpected success of DeepSeek sent shockwaves through tech and AI sectors, fueling concerns among investors in large-cap U.S. technology stocks. With NASDAQ futures plummeting and stock markets potentially set to lose $1 trillion in value, Bitcoin's close correlation with equities came under scrutiny. Short-term Bitcoin holders faced increasing pressure as prices fell, revisiting key support levels around 96,000. These levels are critical because they mark the point at which many recent buyers would face unrealized losses. Analysts warn that breaching this threshold could deepen bearish sentiment, potentially accelerating further declines to 90,000. Meanwhile, derivatives markets revealed a cautious tone among traders. The gap between Bitcoin's spot price and perpetual contracts on Binance highlighted bearish sentiment, with derivative traders maintaining a more pessimistic outlook compared to spot buyers. Market watchers noted that any positive signals from the FOMC or improving inflation data could shift sentiment and stabilize Bitcoin prices. Despite the volatility, some analysts remained optimistic about Bitcoin's longer-term prospects. The current market dynamics, characterized by short-term holders entering positions while long-term holders reduce exposure, have been seen as hallmarks of a bull market.
Would you say that the whole narrative of a super cycle is, should not be revisited as a possibility?
I don't see how that happens unless they break this everything code cycle of liquidity. So let's play this through. Let's say we're towards the end of 2025. The US economy and the global economy's picked up. What happens is inflation usually picks up a bit and the central banks start raising rates or tightening liquidity in some form. And that slows down 2026. Doesn't mean we get a recession, but we get a slowdown. So unless we change that dynamic, there's no reason to believe the 4-year cycle won't keep repeating. It'll stop being repeated once we break the root cause of the problem, which is demographic.
Renowned author and financial expert Robert Kiyosaki, famous for his book Rich Dad, Poor Dad, has made a bold prediction for February 2025. Warning of what he calls the buggiest stock market crash in history, Kiyosaki has long anticipated a significant financial downturn, and this time he has pinpointed the timing of the collapse. While he foresees widespread economic turmoil, he firmly believes Bitcoin will thrive in the chaos. Kiyosaki describes the impending crash as good news for savvy investors, claiming it will bring significant opportunities as traditional assets, like stocks and bonds, tumble. According to him, the downturn will push billions of dollars into alternative investments like Bitcoin, gold, and silver. Bitcoin will bloom, 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 he proclaimed, emphasizing the cryptocurrency's potential as a refuge from traditional markets. He urges investors to act quickly, moving away from fake assets and embracing what he considers real assets. Even a single Satoshi, the smallest unit of Bitcoin, he argues, could hold the power to make investors wealthy, while traditional market participants face devastating losses. Earlier this month, Kiyosaki astonished the crypto world by predicting Bitcoin could reach 250,000 this year. This aligns with his earlier forecasts of Bitcoin peaking at 350,000 by 2025, with a conservative low of 175,000 as the financial world braces for volatility. Don't forget to like and subscribe, and let's keep this bull run going.